All right. Thank you guys for joining in. My name is Lakshay. As most of you guys know, I have my own accounting practice and I provide accounting services to realtors as well as real estate brokerages all across Ontario. So for today's session, I wanted to focus a little bit more on real estate and how realtors can save some taxes. You must have noticed that, the topic was how can you save 100K in taxes, but I've changed it to make it a little bit more specific because we're going to be talking about 4 strategies today for how to minimize taxes as a realtor. So without further ado, let's get started. So today's agenda is 4 topics that I wanted to talk about. Number 1 is incorporation, which is personal real estate corporation. Number 2 is buying an electric vehicle and what are the tax write-offs available to us. Number 3 is related to deferring capital gains with vendor take-back mortgage as well as joint venture agreements. And number 4 is how can you use your corporate earnings to buy properties. So number 1 is basically saving taxes by incorporating. All of us know realtors had the opportunity to incorporate starting October of 2020. What does incorporation mean? It just typically means that you can now operate as a business rather than a sole proprietor agent. And when you incorporate, you are basically able to enjoy a lower tax bracket. Doctors, lawyers, and accountants had this opportunity from before, but realtors just got it done, got it approved in October of 2020. So a lot of the brokerage, sole proprietor, real estate agents had contacted me to incorporate their businesses, and now they are able to pay lower tax bracket. What do I mean by lower taxes? Let's look at the tax brackets as a sole proprietor agent. So if you are a sole proprietor agent, you would be basically paying based on this tax bracket. In this scenario, if you're making approximately $43,000, 20% taxes, followed by if you make $43,000 to $47,000, you make 24% is the tax rate, and so on and so forth. Most of the realtors fall between the $90,000 to $150,000 worth of taxes. So if you are a sole proprietor agent who has not incorporated, you're on the hook of paying 43% taxes. So how can we reduce this? The best way is to incorporate. When you incorporate, the taxes significantly are lower. Why? Because the tax rate on first $500,000 of income, when you incorporate, is actually only 12.2% to 12.5%. Yes, you heard it right. $500,000 worth of income, you're only paying 12.2%. Whereas if you were operating under your personal name as a sole proprietor, you will be paying 53% taxes. Not so pretty. So let's look at it as an example. So if let's assume you were making $400,000 of income. With the $400,000 of income as a sole proprietor, you have rent, advertising, utilities that you pay for, and after total expenses of $55,000, you're left with $345,000 of income. This $345,000 of income will basically throw you into 53% tax bracket. That 53% tax bracket is technically not so pretty because you're going to be paying $184,000 in taxes. Now let's look at the same numbers, but if you were to incorporate. With the incorporation, it gives you the ability to not just pay the regular expenses of rent, advertising, and utilities. It also allows you to pay yourself a personal salary, your wife and kids a personal salary as well, which is again on the lower taxes. So after $400,000 of income, after paying $135,000 of expenses, you're left with $265,000 worth of income. On $265,000, you're paying 12.2% taxes of $32,000. Now you might wonder, we must be paying taxes on the personal income as well as the salaried income to the wife and kids. What are those? So basically I've calculated here as well, which shows $10,000 and $7,000 worth. So 10 plus 7 plus 32 still works out to $50,000 of taxes under your PREC model, whereas under your sole proprietor agent, you were paying $184,000. So this results in a tax savings of over $134,000 worth. So that is a very good example of what you should be looking at when it comes to incorporation. So that covers point number 1. So strategy number 1 was incorporating.